Let's now talk to Mr. Vikaash, Deputy CEO and COO of Embassy REIT. He's joining us now on the show. Vikaash, thank you so much for joining in. Let's start off with the fact that, the dividend figure certainly is pretty impressive. I mean, we have a weak market, but you managed to declare quite a significant dividend. Also, you've got a couple of restructurings in the quarter gone by. So let's talk about both of these factors.
Dividend of 1,880 crores in FY 19-20. In fact, the dividend that Embassy REIT has declared is higher than the dividends of all the Nifty realty companies put together. This goes back to our philosophy of being a total return story. So apart from the dividend, we also have seen an appreciation in our stock price since listing, despite the volatile market environment, and have delivered a total return of 25% in the last financial year. Again, the returns reflect the fundamental health of the underlying business. We saw our net operating income increase by 16% last year, and our portfolio continues to be in great shape, and our assets continue to be the best quality assets in the micro markets. In respect of the restructuring, that's merely an internal restructuring between some of the REIT entities, just to make the distributions more tax efficient. And we'll be going ahead with applying for that and taking approval on that.
Around the lockdown, what is the rental collection trends that you would likely witness in properties? What are the collections that probably you've seen so far?
Sure. So, of course, lockdown was not anticipated, and its last couple of weeks has been hard for a lot of people globally and in India. But in terms of our business and the collections, it continues to be robust. In fact, for the month of April, we collected rents totaling approximately 95%. And for May, the trends look strong with close to 90% as we speak. And the collections are coming in still. So our business continues to be resilient. The collections continue to be good at 95% for April. And this once again reflects the quality of the underlying customers, the tenants which we have. Our tenant base comprises of global Fortune 500 companies. 45% of our rents come from them. Majority of our customers are multinational, and the collections actually reflect that. So our REIT continues to be resilient and insulated compared to some of the other hard-hit sectors and segments such as retail, etc.
Have you seen any instances of delayed or lack of payments in rents by tenants? How are you handling these issues if you have? And also, are you sort of foreseeing any force majeure clauses and issues cropping up?
In terms of force majeure, I think we should distinguish the commercial office sector from some of the other sectors such as retail and hospitality. The office sector, we have consistently maintained at Embassy REIT that force majeure is not applicable. We have continued to keep our parks open throughout the national lockdown period. And mainly this is to support our customers on all the mission critical activities that they do. And we have also ensured during this lockdown period that health and safety is given #1 priority, both of our employees as well as the employees of the occupiers. So our tenants, including the global corporations, they understand that force majeure is not applicable. And I think except for some really small businesses such as food court and other tenants who are more on the side of ancillary amenities, all of our office tenants have paid, majority of our office tenants have paid the rents, and they understand that force majeure is not applicable. In fact, we have been receiving extremely positive feedback and accolades from our occupiers, given the fact that we activated our business contingency plan on 4th March, much ahead of many of the other players, and also ahead of the lockdown which was instituted. So we have done all that we have tried to do all that we can do as landlords, and our tenants really appreciated all that we have done.
Tell us about the post-lockdown, pandemic, that post this pandemic, once the lockdown gets lifted, are you looking at a V-shaped recovery, which is likely, or you expect things to be slow?
It's still early days. I think we'll all have to wait and see how this pandemic and the impact of it pans out. But just focusing on what we know today, I would like to share a couple of interesting points. One, occupancy across our portfolio continues to be strong at 93%. So we are still at very high levels of occupancy. We have not seen any vacancies both in our portfolio as well as in our core markets of Bangalore and Pune, which continues to be at 5% vacancy. Obviously, as the effects of the pandemic are known over the next couple of quarters, we will have to wait and see how that impacts. But we believe our tenants are pretty sticky simply because they incur huge capital expenditure on their furniture. Their rents today are actually 33% below the market rent. So they are already at below market rents. And most importantly, tenants are here in India for talent. They are in India for to access the talent pool. The rents constitute a very small proportion, approximately 2 to 5% of the overall cost base. So I think the focus is actually going to be on better managed, high quality properties which have full compliance and safety in place, because employee safety is going to be the first priority for all global and large Indian companies. And we are one of the few landlords who can provide them that. Now, just moving quickly, in terms of once the lockdown ends, how do we see in terms of market and in terms of our own portfolio, and will it impact? We actually think there will be a massive consolidation that will happen in the commercial office segment. We think demand will once again move to fewer players, and we will be one of the beneficiaries of that. So we think that will happen. Also, a lot of landlords or developers have stress and liquidity concerns. At Embassy REIT, we are pretty resilient and well positioned with about 1,300 crores of liquidity as we speak, and also debt and a leverage ratio which is pretty low at 15%. So we are one of the most well capitalized real estate companies, and we are resilient and positioned to weather this storm and come out even better.
Thank you so much for joining us then today on the show.